Hi everyone, welcome to the channel. My name is Philippe Marie-Jean Robert and I am the founder of Kwajami Financial, an independent firm that provides both financial planning and investment management services to Ontario residents. If you are a returning subscriber, welcome back. If you are new to the channel and would like to learn more about financial planning and investment, please click the subscribe button and the notification bell so you don't miss any upcoming videos. This will also make a huge difference in helping the channel succeed. There are many different types of investment accounts in Canada, but one type of account, namely the tax-free savings account or TFSA, which was introduced in 2009, has gained tremendous importance since being introduced. In today's video, I will discuss some of the key characteristics and advantages of the TFSA. Let's get started. A tax-free savings account or TFSA is a type of account that is registered with the Canada Revenue Agency or CRA. It is an individual account that was introduced back in 2009 to provide Canadians with an additional savings investment vehicle. To be eligible to open a TFSA account, you must essentially be 18 years of age or older and have a valid social insurance number. There is a maximum amount that you can contribute to a TFSA each year, and this maximum amount is provided by CRA. You can obtain this amount by logging into your My Account on the government's website. It is worth mentioning that if you happen to have more than one TFSA account, the maximum amount you are allowed to contribute applies to all accounts combined. For instance, if you have two TFSA accounts and $6,000 worth of contribution room, then you could, let's say, contribute $3,000 to each account or $4,000 to one account and $2,000 to the other. Every year, eligible individuals are provided with additional TFSA contribution room. Also, and perhaps more importantly, say that you had $6,000 worth of contribution room last year and made no contribution during the year, your $6,000 worth of contribution room would not be lost. Indeed, any unused contribution room will carry forward to the following year. Another characteristic of the TFSA is that it is a tax-exempt account, which means that your TFSA investments can grow tax-free. In other words, investment income, i.e., interest income, dividend income, or realized capital gain would not be annually taxed as it would otherwise be the case for a non-registered account. It is worth noting that unlike funds withdrawn from an RSP, funds withdrawn from a TFSA would not be taxed. Another important consideration to keep in mind is when you want to recontribute an amount just withdrawn from your TFSA. For example, say that you withdrew $12,000 from your TFSA earlier this year to make a purchase, but in the end, changed your mind and decided to deposit that money back into your TFSA. Making such a deposit this year would only be possible if you have sufficient TFSA room remaining for the year in question. Careful attention must be paid to that because over-contributions will lead to stiff penalties. The good news is that the portion of the $12,000 that was not recontributed will be added to your TFSA contribution room for the next calendar year. Because of its tax attributes, a TFSA can be a valuable and effective tool. For instance, as an investor, you might want to consider placing your most promising investments, in other words, your investments with the highest growth potential in your TFSA account, assuming those investments qualify to be held in a TFSA while still maintaining your target asset allocation at the aggregate portfolio level. This is called asset location, and I would encourage you to work with a qualified and trusted financial advisor to develop your investment plan. As always, don't forget to like and subscribe. Thanks for watching, and see you in the next video.